Good day. My name is Brian Pyle, and I am the co-manager with Portfolio of the Merchant West SCI Value Fund. This is a review of the quarter to the end of September 2023. The Merchant West Investments Value Fund is an unconstrained, diversified, SA-only equity fund that aims to outperform the JSE All-Share Index over the long term. To do so, we invest in South African listed assets, employing a value-based investment philosophy and a sensible risk management process with the backing of the Merchant West Investments research capability. At the moment in the market, we think there is a particular opportunity to buy up good quality shares that are out of favor for whatever reason, and we think there are plenty of opportunities being dished up by the South African market at the moment. These opportunities have probably come about because of selling of equities and bonds by foreigners. And according to our research, we believe that foreigners have sold 100 billion rand of SA equities for the year to date. And this has put a lot of pressure on our market. For the quarter, this fund outperformed the JSE All-Share Index as a result of not having some of the big companies that went down. To mention a few of those, Naspers went down 11%, Richemont 25%, and MTN 18%. On a year-to-date basis, this fund has underperformed the JSE All-Share Index because of its big exposure to South African-only assets, and with the rand weakening, primarily as a result of the effects of load shedding that started around Christmas 2022, this fund has underperformed the JSE All-Share Index. We believe that the market's exuberance for growth stocks is overdone. We're talking on a global basis now. And we think that the potential for a slowdown in global growth and the resultant possible disappointments to earnings that potentially could come along has probably actually increased in the last 3 months. So we continue to maintain a reasonably bearish stance in this fund. But at the same time, we see significant opportunities in the South African market, not because we think earnings will be massively growing or anything like that, but just because the shares have been sold down so heavily, and at this point we think the selling and the value that is in the market is quite attractive. In the last couple of months, we have sold a lot of mining shares, we've sold down a little bit in banks, and taken the opportunity to buy up in some quality companies such as Shoprite, Pepkor, British American Tobacco, 91 and AB InBev. We think our edge lies in a very disciplined investment process where we are mindful of portfolio construction. We've improved the quality of the portfolio of the last quarter by buying into significant opportunities in the South African mid and small cap space, into companies which we think are very well managed with good historical returns. We have high allocation to some great local businesses where we believe is extreme negative sentiment surrounding the economy, and to a large extent we believe that is priced in. And even if things improve marginally, many of these stocks have significant upside potential. We thank you for your continued support, and we look forward to working with you in the future.